So home prices are down even more versus the previous month. Inventory is up drastically and sales are down a lot. Interest rates are obviously high. And what does this all mean in real estate? My name is Rene and I run a team in the Oakville, Burlington, and Hamilton region. And before we get into the discussion about the real estate market for November, if this video is helpful and you like it, please don't forget to subscribe and like our channel as it helps us. Also, if there's something in the video that we didn't cover or it's something that you've been thinking about for a while, please click the link in the description and book a one-to-one with me. I'd love to have a time to just chat anything real estate. So in terms of the whole market, I always like to start off these videos by just letting you know where the following are. In terms of inventory, it's up a lot. We're seeing that anywhere between 261 to 650%. We've seen increases every month, and this is absolutely a dream for buyers, but it is definitely making sellers a bit panicky. In terms of the sales, they are down 42 to 50%, and this is huge, but the good news is that in the previous month, it was actually worse. I think we've seen in some areas that sales were down about 60 or 65%. Now, I always like to do this in my videos. I like to talk about how does this market compare to the hype of the market in Q1 or February, March. If we compare the detached houses, they've dropped anywhere from 19 to 30%. If we compare the townhouse market, we've seen a dip anywhere from 25 to 30%. And if we look at the condo market, we've seen it drop from 10 to 17%. Now, this year has been the year of adjustments and corrections and trying to figure it all out. And I'm just going to show you a chart right here. If you remember, 2017 was another crazy market. And as you can see on the chart, prices were going bananas and the market did adjust. What we've noticed here in 2022 is a massive correction, and hopefully come 2023, it just helps balance the market. If we have a look here at the interest rates, I'm not a mortgage broker and we know a lot, so let me know if you need one. But what I found interesting here is that we are at the highest in terms of rates since the last 10 years. So we had it good for a few years, and we always tell our clients, we say, you gotta just work within your budget, within realistic expectations of what you can afford. So although this chart doesn't look great, and I know that rates are gonna probably continue to go up, I guess the silver lining here is that on the opposite side of things, and what I mean by that is that the sales are coming down, there's a lot of inventory going up, and prices are dropping, so hopefully they can balance off a little bit come 2023. Now, I always like to look at things in a positive manner. So in this market, here's a few items that should make everybody feel a little bit more at ease, especially if you're a buyer. Affordability has been a big thing. The market has adjusted, which means there's hope. And I've been saying this all year long and last year that all we needed was hope. So affordability is great. There's no more ridiculous prices. Some of the prices that we've seen last year and the previous year were just out to lunch. So that's a great thing. There's no more bidding wars. You might hear of one out of 100 or here and there, but there's no more bidding wars, and that's a great thing. So conditions are back, and that's been a thing ever since the market started to adjust, and it's amazing because now you can put a condition of financing or a home inspection, and this is what we've been asking for a good year and a half in this wild market. And this is a really good one too. Like, a lot of sellers are actually really leaning on us realtors to help them with a price. Over the last year and a half, we noticed people were just dictating whatever they wanted, and it was a bit crazy. So there's some good pros and positives about what's been happening in this market. Now, I got to talk about some negatives or some of the things that I think a lot of people know, but it's good to know this. And I don't know if people are telling you this, but if you purchased a house in the last year or during this wild market and you have to sell, it is a very, very stressful situation, because when we're looking at the potential loss involved, it's a big one. So that's a huge thing, and that's a big negative. If we also look at if you got yourself into a variable rate early in the year, and now you're really seeing these payments just keep going up, it's a bit of a stressful thing, and we have heard a lot of people going through it, but we're hoping that your professional mortgage broker can help you through that situation. Another one, if you're an investor, this is a big one. If you purchased a property during the hype of the market and you were going to flip it and hope that you were going to get some good ROI, we've heard a lot of situations where the numbers are just not making sense for the investors and they're holding on to the property, which isn't a bad thing. And they'll probably just end up renting it, which is, again, not a bad thing. Now, let's jump into the city stats and let's go through what we need to talk about, starting with Oakville and how November proved to be. So if we look here in 2022, November versus 2021, it was night and day. Like, I mean, it's all in the red, and the detached house market in Oakville was down 7%. The townhouse market was down 5.5%. And condos were down 8%. So it was red all across the board. And we're not used to seeing this. So one thing I always like to put in my videos as well is you got to look at it over the last 3 years. And if you look at it versus 2019, so if you've lived in your home for at least 3 years, I like to bring out some positive numbers here. And I like to say that in Oakville, if we average it out, you're still up for detached 9%. Townhouse, you're up about 10% per year. And condo, you're up about 9%. So over 3 years, it's still good news. Now, if we take a look at Burlington. So Burlington did even worse than Oakville. I know this one hurts, because if we look at the detached house market, it took a hit from 14%. If we look at the townhouse market, it took a 13% hit. And if we look at the condo, it was just under 2%. So if we compare to 2021, obviously these numbers look horrific. And this is where we're helping a lot of clients just be at ease that if you've been in your home 3 years at least, this is how the market's looking in Burlington. For the detached, you're up about 9%. For the townhouse, you're up about 11%. And for the condo market, it's right around 5%. So it's still positive, and that's the important thing to take away from this. Now, if you live in Hamilton, let's have a look at the Hamilton stats. Not good again, like 14% down in the detached market versus last year, 11% for the townhouse market, and just about 3% for the condo market. So, but if we look at 2021, these numbers were just not real, and that's why we told clients to not expect this growth and wait for the adjustment. So that being said, if we look at the average per year over the last 3 years in Hamilton, this is a good one. So detached, you're up about 14%, which is huge. The townhouse market, it's up about 13%. And the condo market, you're up about 7%. So these are great numbers if you've been in Hamilton over 3 years. If you want to know if you've been living in your home for 2 years and you want to know what those numbers are looking like, get in touch with us. We'll definitely help you out. So before I get into my final thoughts, there's a few extra points that you need to be aware of. If you are a buyer in the market, just a heads up that the going rate to negotiate from list price and sale price, it's anywhere from 3 to 4% at the moment. Also, if you're a seller and you're really curious about where your home is at, I mean, we've seen anywhere from 2 to 14% versus last year in terms of how much it dropped versus last November. And the last point I want to make before my final thoughts is when I keep saying that inventory is high, it really is high. And when I broke down the numbers, like Oakville is up year to date versus last year, it's up about 6 times the amount of inventory. And Burlington is around 10 times and Hamilton is 7 times. That alone should answer why the sales are down, and it should answer why the prices have come down so much, and also why it's taking longer to sell a home. So big takeaways there. Now, final thoughts. If you are a buyer out there, this is the time to capitalize, especially December. We've noticed in December, a lot of people that have listed on the market, they do become a little bit more aggressive on their negotiation and they're willing to drop price. So seize that opportunity. Now, if you're a seller, my honest advice, or if you're thinking of selling right now, do not list it in December and possibly even January. I just mentioned some astronomical inventory numbers, so if you don't have to sell, do not sell, please. It's just we're trying to protect you from being on the market for a long time. Now, if you're an investor, go in there, swoop up properties, because the rental market is still amazing, and that is where the opportunity is right now. Thank you so much for watching this video. If you found it helpful or you like this content, please don't forget to give us that like, subscribe, and if there's something in the video that we didn't cover, like I said earlier, please click the link in the description and book a one-to-one with me, and we can talk about anything real estate. Thank you so much. We live here, and so should you.